Welcome to another episode of That Crazy Triangle Guy. Here we are looking at Bitcoin US dollar index on the daily time frame, and we've gone way back in time to the end of 2022 and the beginning of 2023. And I just want to identify this red channel that we've been trading in ever since then, since we came down to it here in June of 2022, and it held as support. Then we eventually fell into it in September 23, and ever since then we've been trading upwards in this red channel. Now below the channel and perfectly perpendicular to it are two lines, a thinner white line and a thicker, I don't know what color that is, kind of a puke color. Because while we have been trading upwards in this red channel, and of which you can see the center line here has acted as resistance and support along the way here. We haven't always come up to the top of the channel, and when we've come down, well, the reason the bottom of the channel is where it's at is because of this price action here, but we've mostly stayed in the red. The bottom of the channel has acted as support, except for in a few instances here, which usually happen in August, where we pulled back and fallen outside the channel. But as you can see, this white line has acted as key support, as well as this puke colored line has acted as a final support level. Oh, and what's kind of key here is that we did poke through it a little bit there, and kind of just a little bit there. These other squiggly lines are various moving averages. So, and here we are traveling through time. We're in 2024 now, and just showing you the price action through here. Here we did go outside the red channel a little bit, and this was leading myself and many others to believe that this was where we would start going parabolic, but that did not happen. Instead, we just went into a long consolidation and downwards move, similar to what we're doing now, a little pullback, but this was more gradual back then in 2024, and hopefully more drawn out. And you can see that when we did pull back, our puke colored line again acted as support here and here in August and September of 24, as well as the white line right there. It acted as resistance there and support there. As a matter of fact, we wicked down to it here on this daily time frame, and at the end of the day we closed all the way up here. And here the white line acted as support. And what was that? October 10th, of course. CPI day, right? October 10th, or October CPI data release in October often marks the pullback moments from when we start to rally. As you can see, we did there, and we did in 2022. We go back here, probably in 2023. Let's see what happened in 2023. October, yep, right around there. CPI data release, boom. And October 2022, where are we? Excuse me. I gotta sneeze. All right, I'm back. October 2022. Right here. Marked the bottom of the stock market and would have marked the bottom of the crypto market. Well, actually, June was the bottom right here. But this would have been a second kind of bottom here had it not been for the FTX collapse right here. But the stock market did not have this little section here in it, and October 2022 marked the bottom of the stock market, like the S&P and NASDAQ and Dow, all of them actually, I think. So there you have October CPI data release, big day in trading. And so here we are in present day, amongst this jumble of lines here. And what have we done recently? Well, we came down below the red channel right here, and that was on March 9th. And where did we come down to? Our puke colored line here, and we did poke out it just a little bit. And you can see that on March 9th, the white line originally held as support. And the following day, 2 days, we came down to the puke colored line and then popped back up. And since the white line has acted as support, we've been trading above this white line for many days. Until just a few days ago, on the 29th of March. Wow, that was just over the weekend. We did fall below the white line again. A little bit prematurely, I thought. And have not come back down to the puke colored line yet. As a matter of fact, we've come down to this white line heading downwards here, and that is the base of a channel that I've drawn in the heading downwards here. You can see this is the base of the channel, that's the top of the channel, but that's not important in this video, I don't think. Now, it's been my contention, I had to pause and look that up because I'm terrible with words, but it's been my contention that we are forming, in my last video, which I made, I don't know, a while ago. I'll have to look up when I made it because I noticed this, I think I noticed this inverse head and shoulders forming back here mid-March. And the red line here, the thicker red line, is the neckline of the inverse head and shoulders. Now, I knew an inverse head and shoulders was forming. However, I recall now that I wasn't sure what the neckline was going to be until we actually got a rejection off of it, I believe. Yes. You know what? It was, we had a choice between this thin white line here coming down, this one right here, this thin white line coming down here, which wasn't, we busted through that was not the neckline. And then since we got a rejection here, I believed that the green line was the neckline of the inverse head and shoulders, and we even started to form this little kind of shoulder here, and we have had a breakout, but we failed to get above my third choice, which was this red line here. And that's when I realized that this is the actual neckline, the red line heading downwards here. We have well, let me just draw it here. Where do we got a brush? Got a brush in here somewhere, don't we? There's the brush. We have a shoulder there, a head here, and we're forming our shoulder there. Okie dokie. Now the head is kind of a little bit deformed. It has like a weird hairdo on it. But nonetheless, it is an inverse head and shoulders pattern. And what we're doing right now is front running what I thought we would do. I believed, I'm still drawing. I don't want to be drawing anymore. Let's delete that. And delete that little guy. I believed that we would come down to our puke colored line once again at around 81,000. Yeah, right around $81,000. And you can see that that's the intersection of this white line, the bottom of this channel coming down. It's and the puke colored line and our green, what we thought was a neckline here. Now I believe the green neckline also is a. No, it's not. It's just a neckline. That's all. I was going to say, and it could be that we are simply retesting. It's kind of weird. We're almost retesting that green neckline, but we didn't form an inverse head and shoulders. Well, I guess we kind of did with a little tiny shoulder here. Very, very strange, but nonetheless, it's a pattern that's telling us we want to reverse here. So whether you look at it as a inverse head with the neckline here in green and this weird kind of short shoulder, which, by the way, is what we're forming right now on a larger scale, with the red line as the neckline. So that being said, let's zoom in a little bit here. So we're on a 30-minute time frame, and we're starting back here at the shoulder. There's our neckline right there. That was on February 24th, where we came down here and formed our left shoulder. Then on around March 3rd, we started coming down this way, came back up, and we're forming a funny looking head, which here is where I believed it was, right? Yeah, I believe the green line was the neckline, but then we formed like this little kind of malformed, malnourished shoulder there. Oh, but in reality, we're just forming the rest of the head and getting a rejection off of the red line here. Pretty close, actually. Not quite. Did we come up to it? So look at that. We did not quite come up to it, but the red line does connect our shoulder here and there. So, yeah, pretty darn close there. And then now we are forming the right shoulder here. And besides forming the right shoulder, we are forming an inverse head and shoulders pattern on that right shoulder. And when I started looking at this, because we're on the 30 minutes, so this is way back here. When I start watching price action go up, well, first of all, I saw this inverse head and shoulders here, and that we came down actually to the what I thought was the neckline. So line obviously is important. And when I saw that line acting as support, I'm like, oh my God, we're forming this inverse head and shoulders here with a target drawn right there and placed right around here somewhere. Looks like we might, I thought that we would hit here in the morning when market opens, but it looks like we're smart money's front running all this shit, I think. So while I'm sitting here waiting to get back in over here at 81,000, could be our breakouts already our reversals already starting back here. So I'm going to miss my 81,000 buy-in, and I'm going to have to wait probably till we bust through here and possibly come back down for a retest around 84.5. So I'm not going to, if I buy in now, then we're going to get a rejection here and come back down. I know it sure is day. I know if I try to front run this thing, like I think it's the way it's going to play out. I pull this target from here over to here, and that gets us up to about 86.5. And where 86.5 hits the red neckline is over here Friday when we get the jobs numbers, the U.S. employment numbers. Pretty much at the when do we get those numbers? Let me see. Look at on my computer right now. Friday U.S. employment report. Yeah, it comes out at 8:30 in just before market open, an hour before market open. 8:30 is what time? It's 13:30, I think. I don't know. It's either 12:30 or 13:30, which is right around there. And so we got a lot of important numbers coming out this week and CPI data coming out next week. And it's been my contention, again, my new word, contention, that we'd be forming this inverse head and shoulders pattern, coming down here and coming up to our neckline somewhere around CPI data release next Thursday. Next Thursday it is. Wow. The 10th of April. Now, that's also when the full moon is coming out. So that plays in with the moon stuff. The moon schedule. And that's what I believed would happen. We'd come down here, form this shoulder, and hit our neckline on CPI data release, with the belief that the market is going to wait. The market is going to wait till it gets those numbers. Now, possibly, we do break the neckline, and we do even maybe start rallying over the weekend, but then we come back down and retest the neckline here at about 85,000 on CPI data. Maybe that's the way this is playing out. If so, that's okay. 85 is a good buy-in. But once this happens, I believe that we're quickly going to go above 100. And I have a couple of reasons for that. First of all, so you see, okay, I already talked about the green target here of this little inverse head and shoulders, taking us up to about 86.5, right? And so what we could do here and it looks like we're now that's around 84,000. And I'll show you in a minute the current liquidation heat map. And that's what's kind of fueling this a little bit is shorts getting liquidated. So maybe we bust a move here, come back down into Wednesday, Thursday, whatever. What do we got coming out? Let me look at my computer right here. Tomorrow we got, now see today, the Chicago Business Barometer beat the forecast. Forecast was 43.6. We got 47.6. It beat the previous of 45.5. Now I guess it's still below what's considered, what's the word they use here? It's below. Oh, here we go. Advanced 2.1 points to 47.6 in March. Third consecutive monthly gain. That's positive. Taking the index to the highest level since November of 2023. Though it remains in contractionary territory for the 16th successive month. But it's gaining, and it's gaining more than it has since 2023. It's the highest it's been since 2023. So, whatever. Sounds good to me. So that happened today. And then all these other, I don't know, you just go to Market Watch. And well, why don't I just go there now here on my phone instead of looking at my computer? So here we are on Market Watch. See the Chicago Business Barometer, 47.6. And all these other things that come out, S&P final, U.S. manufacturing, PMI, ISM manufacturing, blah, 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 blah. The forecast is either like the same or around or above the previous forecasts. And as long as we hit those numbers, job opening 7.7 million, same as last month is what's expected. ADP employment 120,000. That's good because we want that would influence Jerome to lower interest rates. Anyway, there's a lot of numbers here, and they look pretty similar to the prior month, or not too far off from the prior month. And as long as we get those, like the U.S. employment report, those are those layoffs or job openings. Those are layoffs, I think, right? Right. What is this back here? Oh, there's just so much jobless claims, right? Wait, what's ADP employment? Yeah, those are. I don't know. I could be wrong. Whatever they are, I don't know what they are. I'm confused. But like U.S. unemployment rate is set to be the same as hovering right around 4.1%. So these numbers, it doesn't look like the forecast is expecting anything much different than what we've been getting. And Jerome Powell will speak on Friday, so that's good. What time does he speak 11:25. That'll be at like 8:30 in the morning where I am. So that'll be pretty keen. And then next week we do have some blah 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 stuff, and then we got CPI data on Thursday and PPI on Friday. And they don't have estimates for those yet. But if you look at the last months, those are pretty good. 0.2 and 2.8 overall. So, you know, all this bearish news is, I mean, there's so much just fear mongering in the media and people just trying to sell their advertising and get you to tune in. And plus, they're being fed this info by the smart money that wants you to be scared and sell and not buy in so they can buy in themselves. So that's what's going on there. But I think they're actually front running it a little bit sooner than I expected, which is unfortunate. And while we're flipping through this stuff, let's look at the stock market futures here. But that is not always indicative of what's going to happen tomorrow. It always changes. A lot of times, when it's in the red, and it's just slightly in the red now, and it's been trending, towards green. I think as the morning, we got 5 hours till market opens. So a lot of times it'll be red overnight and then it'll flip green in the morning, and vice versa too. So futures doesn't always indicate what's going to happen tomorrow, but it's not like really really bad like it was on Sunday night, where like the tech was like 1.5 to 2% or something like that in the red, and the S&P was tech. I meant NASDAQ. These are real. Anyway, these are like the US 30, US 500. They're just simulations of these other ones because they're given in real time there. And the actual, hey, what are you doing? I didn't do that. I didn't click on that. He thought I did. The actual ones down here are delayed. Yeah, 10-minute delay. But they're the same as these other ones up here, I guess, as far as I'm concerned. Mm-hmm. So, back to what we were talking about over here. So, oh, look at that. We're breaking the neckline on our inverse head and shoulders right now. We've broken the neckline. We're up above 84. And what I was going to show you now, so we're coming up on the I'm going to be honest, I don't know what that white one is. Oh, yeah, that one is the 20. This white one's the 20-day moving average simple. The yellow one, so this white one here is the 20-day moving average. Red is the 200. And the yellow one up here is the 50-day. That's the death cross everybody's looking for. The yellow falling below the 200 there. And the pink one here is the 21-week EMA. And the blue one is the 55-day EMA. And the light blue one way up here is the 21-week SMA. And the green one here is the 100-day moving average, simple moving average. And you'll notice that, all these moving averages are like between 84 and 88. So If we can break through all these and hold as support above and get above 88, that would certainly be pretty good. And you'll notice that, I don't know, like the 20-day moving average is approaching this neckline. The 200-day moving average is approaching this neckline on Friday. Over here, if this keeps going like this, it'll be around here on Friday, as possibly these other ones too. So, just all too weird. So we have broken through our neckline here, which is, that neckline is the white line that has acted as resistance and support. It's a very, very important line overall. So possibly we're done being below this line. That's crazy. Oh, but we are getting rejected. We are below it now. This is a 30-minute candle, and it's 10 minutes into the candle. It's just for shits and giggles. Let's look at look at that. There's on the 5-minute. Look at everybody getting in on the action. So this is, a volume of 200 on the 300, close to 300 on the 5-minute. So that would be equivalent to like 2,400 and 3,600 on the hourly. That's a lot of volume there. And so the bears and bulls are really fighting this point right here. Now would be a good time to go look at the heat map here. I have the symbol. I have it on symbol here, and I also have it on the 12-hour. Let's refresh this. Yeah, and you can see how we've come up through there. And we have some fresh action coming in there. It's only 14 million. But let's go on the 24-hour and, just look at various times to see a little bit more shows up there as you expand out. Oh, it says 0 because they sucked that up. 25 million, that shows. No, it's funny because, this says 25 million. When these liquidations actually occur, it's like 500,000 or possibly possibly like 1 million or something like that. It's like, hey, what happened to that 25 million that was going to get liquidated? No, it's like 1 million, only 1 million or 800K or something really stupid. No. For the hell of it, let's go out to 1 week and look at this chart. Spin, spin, spin. We got yellow up here. How much yellow we got? 119 million. And it's not, it's not that there actually is that much. I don't know what these numbers are, but it's just go by the colors, I guess. Just shows that there's a lot there. And it starts here at about 87,800. 87,800 up to there. Now, of course, this can all change. Could all change in the next hour. All this could disappear. You never know. But between 87.8 and 89, there's a bunch of yellow there on the weekly. Let's go on the 2 week just for the hell of it. Let's see if it changes much. And are you gonna do it? No, it's the same. So it doesn't always. See, now it says 218 million. But anyway, between 87 and 88, there's a lot there. And when we go back here, you can see we are really battling here. Hopefully we get rejected, because I'd really rather not buy in up at 84. I'd rather buy in at 81 or possibly even 77, you know? What happened to our 77, 74, 70, and maybe down into the 60s? Come on, man. So, and could we even get rejected off of the 20-day moving average? Whatever. But I imagine if we hang out up here, by the morning, yeah, if we hang out up here by this time over here, and the regular markets are pumping, and we, what data do we have coming tomorrow? We get this ISM manufacturing and all these other numbers, construction spending, job openings, all that stuff looking good, then I imagine we are going to rally. Imagine we're going to rally, maybe get a rejection off the 200. We could rally up to 86 or so and get a rejection off the 200, come back down and test this white line another time, hopefully. And at that point, if we do bounce there, that might be a time to consider getting a lead on this. For me, that's what I might do. If we do get rejected off here, come back down and find support here, that might be a good area to load up a little bit. But remember, we still have to come back up to form the shoulder of our larger inverse head and shoulders. Now the target from that, which I drew, where did I draw it at? Didn't I draw it? Oh, you know what? I didn't leave the target drawn here. I just moved it over, and I moved it over right over here, and that is on Saturday. But I put it right over here by Friday. It's close enough. Anyway, that target is, by golly, it's 104. And of course, I don't believe, we're just going to go straight up to 104. Maybe we go up to, I don't know. I'm getting ahead of myself. Now, this yellow dashed vertical line here marks the CPI data release on Thursday. Do I have the hour right? Yeah, 12 o'clock. Possibly what does happen is that once we form this shoulder coming into Friday, hopefully, of course, we could just come straight up here and form it tomorrow. If we break the 200-day moving average tomorrow, which is at currently right around, it's at 86,194. If we break that tomorrow, we could bust through the next line at 87. Now remember, we had that liquidity at 87.8 to 89. What is that green line? Who knows? So if we do bust through the 200 at 86.1, we could come through tomorrow 87 and see the 50-day moving average is around 88,000. Maybe we get rejected there because we just take some of that liquidity right there at 87.8. And then the other guys kick in and say, hey, no, this is where we stop you. Could be a possibility. Anyway, something like that. And then we see a pullback. Anyway, so I don't think that necessarily we're just going to shoot up to 104 here. We could rally some and then see, maybe even rally over the weekend. Up to where, I don't know. Maybe up to these, to the 100-day moving average or the, that's the 21-week simple and the 100-day simple. Huh. Yeah, I'd keep an eye on these moving averages and stuff for support and resistance and rejections and whatever and bounces. And my thinking is that it's always, the market's always wanting to see what these inflation numbers are. So I don't think we're going to explode before getting these numbers unless the smart money knows that, unless they front run this. And if we do pull back, do we pull back all the way down to here, down to 84, giving everybody a chance to get in once again? Or do they just start running it before that and come back down maybe to 93 here? And this is the point where I would look at these other things. We're on the 4 hour now. You know what? What are these levels here? Okay, that's at 88. 80s. Okay, so this is why all that leverage is there. Because they're trying to hold this, trying to keep us below there. So I get that. And yeah, maybe I don't know. Don't know. What is this up here? Our shoulder is up at, 94. And that is up at 96. So that's why all those numbers are important here. Where are they here? Let's see, 87, 88 over here. That's the bottom. Well, if we came straight up tomorrow, yeah, it's not quite the bottom. We'd still be making a higher high if we hit our red line. If we got rejected off this red line here, which is that channel, the bottom of that channel that we've been trading in. Yeah, even if we came straight up right now and hit that red line, it would still be above 87, 88. It would be a higher high. Which is good. We could still have a pullback once creating a higher high and liquidating those people. Yeah, that actually could really sound like it could work. And this again is Friday. So yeah, over the course of the next few days, coming up, getting a rejection off the base, the bottom of our of our channel here, creating a higher high than this, coming back down, making another higher low. And then coming back up now to make another higher high, higher than, what did I say? This one was at, up at 94. And I'm looking on the 4 hour. I don't know what the dailies are. That would be right around the this white line, which represents this channel, the top of the channel that we're currently trading downwards in. Let's look on a daily, see what these closes are at. Yes, that's like at 94, 350, 90. Yeah, a few hundred over 94. That's at 90,000. Okay, those daily closes are at 87.5, which is significant because the major short liquidity is above that, like around 87.8. I think it's starting. So do we get a rejection below those daily closes? I don't know. So keep all this stuff in mind. I don't know how it's going to play out. It's setting up for a good pump to the upside. And it looks like it could be, playing in with these numbers here. I'm just kind of scared that they're going to front run it, but I know if I try to front run it, I'm going to see a failure, and it's gonna go down to like 60 or something. But I don't think so. Bitcoin is just, there's too much going on with Congress passing all sorts of legislation, and the president's family buying Hut 8 or whatever. They're working some sort of partnership there to mine Bitcoin, I heard. And just all the stuff's going on. But the Bitcoin conference is coming up too in Las Vegas. I think that's in May. Is it the end of May? I don't know. Because I hear people talking about, when I look it up, it's like, I think the end of May. Let me look on my computer here. Which is, why are they talking about like it's next week or something? And it's like 2 months away. You can't type. Yeah, Bitcoin Vegas, May 27th through the 29th. But typically, we always dump into the freaking Bitcoin conference. But again, so like I said, that's 2 months away. Can still see a significant rally, even up above 100. And then see a pullback maybe down to retest 100. But anyway, the target, remember, this target is 104 or around there somewhere. And so possibly we could see that. Who knows? after we get sometime after we get the CPI data release, and maybe not too far afterwards. It could just shoot right up. Oh, the reason, I remember I said I had reasons for that, and we're on a daily, so that's good. Let's just squish everybody together, and let's organize them. Well, I don't know why I just did that. But if we squish everybody together and we do that, and then we bring up our volume profile data, our visual range volume profile, we turn that on. This is what we've been doing. This is what I wanted to say too. What we've been doing all this time. So this is zoomed out to give you data since last March, since, down here at 60,000. Whatever. And if we zoom out more, this fills in more here because it picks up the data from even the previous cycle and all that other stuff. But actually, so above 70, above here, we don't have any data going back further that would fill in any of this right here. So what we've been doing since we ran up here and coming back down, we're just filling in all this area here that was empty. We had like a lot up here, but we had a big hole down here. And now we filled in that hole. That's all we've been doing, and that's important to do. We're leaving a little bit right here, which is kind of misleading. All the way down to about 77 something, 77. We could put more in there, which is why I still think that's possible, or possibly do we hit that in the next bear market? Now, if we get up to something like 150 to 200,000, you know what? I even have said if we get up, I think in previous videos, if we get up to 225, say, a 70% pullback would be just multiply 3 times 22.5 and you get 67.5. So even if we had like a 70% pullback or 2/3, let's say 2/3, so roughly, say you get, just say for ease of math, we get to 210,000. A third of that, if we, get a 65% pullback, would be around 70,000. So that would bring us back down to all the way down here. I don't think we'd come all, well, maybe we'd come all the way down here because it looks like we could. Looks like, okay, where's my, there we go. Looks like we could come all the way about down here somewhere and fill in this more at that time. So maybe this is what we do for now, and it gives us enough support that we, so yeah, that being said, since we bothered to come back down here and fill in all this area, when we start pumping right now, we could easily come all the way back up here to where? Like 105, that says. Which is where our target is, 104, 105, whatever. We could easily come right back up there and then just start boomba, 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 and onwards and upwards. Now, one other thing I did want to bring up, and let's turn these guys off here, is the this green line here. Everybody's talking about the recession, and there's something about the Atlanta, what are they called? The governors, the Atlanta Fed people, forecasting a negative 2.8 GDP for the first quarter. GDP for the first quarter comes out right here, April 30th, end of this month. That's the first release, And then they have like a couple other revisions. Yeah, see, it says GDP Q1 right there. Now, I have another green line over here. And let's see what that is. Does it say what that is? Oh, GDP Q2. I think, yeah, that's like July 30th, yeah. So a recession would be defined by 2 negative quarters of GDP successively. So these would be key dates that the market's looking at: April 30th, July 30th. So possibly, if we do get negative numbers here, whatever, we could still rally, depending. Maybe Trump does a lot of bullish stuff, and there's a lot of bullish news for Bitcoin and whatever. And I don't know where Atlanta's getting those numbers, and maybe they're factoring in a lot of government job layoffs and everything, but if so, and then maybe that's why the administration is looking to remove government job data from removing the government job factor from the GDP. Possibly that's why they're trying to do that, because that could greatly affect what that number is. So, and that's just what I heard. I heard someone mention something about that somewhere. So, it's all up for interpretation what these numbers actually mean. Our economy's not bad. Like I've always said, we're living in a world. I grew up in a world where, and even in my younger years, I'd make my own lunch, bring my own lunch to work. And when I was a kid, I remember mom and dad couldn't always take us anywhere we wanted to go. It depended on if it was on our way. We just didn't drive everywhere we wanted to. And nowadays, people just drive everywhere they want to. They sit with their cars running. They buy fast food every day. They buy $10 coffees or what have you, instead of making your own coffee and putting it in a thermos. Get freaking real. They have people deliver stuff to their homes. This is not all that stuff. People don't even know what hard times are. So you live in an economy that has all that stuff going on. That's not a bad economy. Anyway, that's my little rant. So let's zoom in, see what we're doing now, how we're doing with this rejection and breakthrough on our neckline here. Oh, yeah, we were getting rejected and we're breaking through. And yeah. But we got declining volume here too. That initial big volume we had, kind of losing the steam a little bit, maybe waiting for a market open. So those are my thoughts. And just going to have to wait and see what happens. I'm afraid to FOMO in, because I know I'll get what I deserve for FOMOing in, because it'll just be a a bull trap or bear trap. I forget who's trapping who. It's a bull trap to the upside, right? A bear trap to the downside. Whatever. It'll be one of them traps if I try to FOMO in now. And very well, I was going to say very well, it could be a bull trap is really just the market makers going up and liquidating the shorts. And then they take it back down and come after the longs that got suckered in. And vice versa. But now here, even going out 3 months, I don't see down here where there is like a ton of liquidity. There's some, but it's not a lot. I think everybody's scared out. And that's like long term, that's like a lot. But let's go on like, what are we on? 3 day? I just accidentally hit 3 day. So they're coming up here and taking this stuff out. But what's below? There isn't really anything below here unless they come all the way down. Yeah, to around 81. Maybe, because, I said, who knows? Who frickin' knows, man? Yeah, they could come down after that. But again, I don't think the numbers this week are going to warrant that. They could. Nobody knows. I don't know. Maybe somebody knows. Could they come down and get this stuff? What's this? Yeah, it's all down around 81 something. Maybe so. That would still be, they'd still be able to do that and stay above this low here. They could still take out this chunk right there. Yeah, just under 82. That's not very far away. It's a couple thousand. So that's a possibility. So I think I've gone on a long enough. So thank you for hanging in there. And I hope you've had fun analyzing this with me. And we'll see you next time. And here I was talking, and my little light wasn't on. My little recording light wasn't on. Anyway, we're back here looking at this on an hourly time frame and our inverse head and shoulders. And what I was saying is that on the hourly, I was looking at the 4 hour, and it's not a real head and shoulders formation on the 4 hour. I mean, it is. You can see it, but it's more clear on the 1 hour. And I was saying we still had 3 more hours left on this 4 hour candle. So it could come back down and close below the neckline even. But on the hourly, you can see we broke through. And what I was saying is that we didn't even come up and test the 20-day moving average yet. And when you see that it doesn't come up like that, maybe we come down more, but then we come up and hit it on the next candle or something like that. Or possibly even on this candle. But this is not a rejection yet, I don't think. Could be. I mean, but usually we actually come up and touch stuff. So we got this hour, and then we have 2 more hours. So possibly even we come up and touch it on this one, and then even get rejected on the last one. And that would be just before market open, and that kind of want to watch where we close on that candle. But I mean, that's just if you're so super glued in there. But so many games are played, and I up and on the hourly and 4 hour and what have you. I see things get tested and rejected and found support on and failed. And even though it might act as support here, a few hours later it breaks down and doesn't act as support anymore. So, and this whole thing could be a fake out. And yeah, even this thing could be a fake out here, and this inverse head and shoulders could fail. Although it looks like a really good setup, especially with the larger inverse head and shoulders forming, which I did say is kind of wonky. It's a wonky head. It's not. But we're in wonky times. So, I mean, it's a good setup for a big move upwards, and it's what you'd want to see. But again, because we have been getting rejected here. I'd like to see what happens here. Maybe we come back down, keep trading like this. Who knows? That could be the case too. So, okay. We shall see you next time, and I don't know when that's going to be.